the needle on the record.
Welcome to Wage Cucking with J-Mo.
Hey guys.
Hey.
What's up?
Welcome back. Welcome back, J-Mo. It's been good to have you back.
Thank you.
You've been on an extended vacation away from being a wage cock.
Yeah, unpaid vacation. I was not compensated for my vacation time, but it's okay. I had a good time, so I'm back.
You didn't dox yourself, but I've noticed you have not posted any sushi on Twitter yet. So I'm suspecting you were maybe not in Japan.
My whereabouts are for me and me only, but yeah, I have not posted any of my sushi on Japan or on Twitter.
Okay, so I guess last we spoke about the Binance FUD, and this was right after we'd been to Singapore.
Yep.
For the token, what's called 2049 conference.
Yep.
And yeah, we had like this odd conversation because we're sitting there and looking at each other, and it's like, man, there sure was a lot of Binance FUD at the Singapore conference. And I'm like, I mean, I don't know why. Nobody has anything concrete, but there's so many people, talking about Binance and CZ. And I don't know how long it's been, but it happened. Like the worst case pretty much happened.
I wouldn't say the worst case.
Well, yeah, but
that's a debatable topic,
instead
right?
of
Yeah. So after token 2049, we discussed this, and what we discussed sort of played out exactly, right?
Yeah.
We talked about how, at least I heard talking with other exchange operators, people that would know that essentially the issue with Binance was isolated to CZ and CZ related entities. And like a likely situation was they would levy some legal action against him. They'd possibly fine him, and he'd be forced to step down.
Yeah.
But Binance itself as an entity would be fine in theory. I guess now it's still not insolvent, despite what our guy Adam Cochran has been tweeting for the past 2 years. One thing that annoys me about the whole situation is that Adam is now doing victory laps like around Twitter, acting like he got the situation correct and just like telling everyone, "I told you so." Whereas if you go back and read exactly what he was saying like everything that he was saying was related to Binance not having like proof of funds. They're insolvent. They had to move like the BUSD to TUSD, I believe, which was like a sketchy stable coin, which still is holding peg. As far as I know, no one is having issues withdrawing from Binance. So yeah, it's just like ridiculous that like this comes out. You say like the worst case scenario. Maybe it's like a pretty big scenario for CZ. And
exactly. But to just to clarify on that one, when I say the worst case is because we don't know if he's gonna have to do some time. And in my opinion, having your freedom taken away is often the worst case.
Yeah, and I feel like this has been in the works for a while because I made a tweet like 6 months ago that like CZ was going to step down and Richard Tang was going to take his position, and this is what people like within Binance told me that they were preparing for. But then basically time passed, and like I thought to myself like, wow, this is taking a while for this to happen. Maybe the news is fake. But yeah, like basically all that had to happen was CZ step down. Richard Tang, who I'm pretty sure was the person that was reported to me. Like I know the last podcast we joked about maybe CZ's having like a Wolf of Wall Street moment where he's like, I'm not fucking leaving. I'm staying here. I'm going down.
And somebody made the meme with a face swap. Did you see that?
Yeah, I saw that.
We'll have to post a link. Somebody posted that moment, but with CZ's face instead. Well, you said you think it's been going on for a while. So, what do you think that negotiation has been like between CC and I guess the US? Like for how long? Like how's that work?
So like I know for a fact it's minimum 6 months because like around 6 months ago I was told that Binance had this plan in place where CZ would step down and Richard would take his spot. And when that got reported to me, I thought it would be like within like a week or a few weeks because this is at the height of at least a few at the time like the FUD was really ramping up to a point where I don't know. It just felt like it was imminent, and then like time passed, it sort of died down. Adam continued yelling at people on Twitter about how Binance was insolvent, but other than that, there wasn't much information coming out. What I didn't know was the reasoning behind all this. It sounded like they were basically allowing terrorist organizations to store and trade funds on their platform and like looking the other way,
Is
which
that? Do you feel like that's likely?
yeah, I mean, it makes sense. Like, I know all these terrorist organizations definitely have some sort of crypto wallets, crypto
But
accounts. They
why?
transact in crypto.
How? Why would they let that happen? We're talking enormous risk for small amounts here.
Yeah, that's a good question. I'm not sure if it's small amounts. I guess they might have been doing like a lot of volume, or they had big positions or big wallets on the exchange. I
Hmm.
don't really know the details. Like, obviously, if I was operating an exchange, I would. This is like would be one of the first things that I would stop from happening. Is
It's
like
it's the main thing. It's
yeah,
it's
like
literally number one.
I feel like the KYC AML portion of it is important in the eyes of regulators, but the regulators will really notice. Like they might not care if, like for example, if an American logs on and finds KYC in another country, but they're going to care if like a terrorist organization starts like using your exchange and like finding alternate ways to KYC and move money back and forth. So yeah, I guess might have been just due to negligence, like that they didn't really do their whole AML checks, and they possibly didn't know, or they knew that something was suspicious was going on, but they didn't know exactly who was controlling these accounts. But yeah, in the eyes of the U.S. government, like this is something you just can't be doing.
Mm. And do you think there was any connection at all uh, with FTX uh, and CZ at least being part of the dominoes that made FTX finally fall down? And do you think there was anything there? Him being Chinese, although he says it's international, SBF being American. Um,
I don't really think so. Like, I don't really think the whole FDX situation. The biggest impact that Binance had was that they bought equity at like I don't know, like a couple $100 million valuation, and they cashed out at near the top, and they cashed out like somewhere around $2 billion of their equity. So if the equity in FTX wasn't real, basically, but Binance was like the biggest profiters, and then like in some people's eyes, you can look at it as Sam paying the $2 billion to buy out CZ's equity. That $2 billion possibly could have come from customer funds, right? Like he just took customer deposits and paid it to
mhm,
CZ. So in theory, it's possible that money could be going back to creditors.
mhm.
Um, but I wouldn't equate it to that. Like, and I feel like people saying that like CZ was the cause of the downfall of FTX, like completely
I
misses the point that Sam
Yeah,
was
yeah.
literally stealing money from
I, I,
his,
wa-
his
I was gonna
client.
say that I was gonna say I agree that the downfall of FTX was that he was stealing the customer's money.
Hmm.
That's a bit
Yeah,
of a
that
problem on
seems
that
like
one.
the biggest part, doesn't it?
Yeah, yeah, you can't really be doing that, and like, I mean, it's easy to blame. Like, maybe they have a point where if the whole CZ FTX thing didn't happen, then it's possible that FTX would still be running. It would still be insolvent. But if there wasn't a massive bank run, if they were able to, like the whole situation sort of started when CZ publicly announced that he was looking to sell all his FTT, and he was going to basically sell his position over time. And then Carolyn came out and said we'd buy it all back at $22, which obviously they couldn't do, or they did not want to do. And that sort of kickstarted the whole FTX collapse, when people were started to withdraw, and like the outflows in the exchanges hit billions of dollars. And only then where it was uncovered that FTX didn't have those billions of dollars to pay back their customers. But if that doesn't happen, if like the major accounts don't start withdrawing and going elsewhere and keeping their funds on the exchange might, in theory, still be running, even though they don't have their customer deposits back 1-to-1. But that doesn't really matter, as long as you can use the exchange and you're not moving funds off the exchange.
And I just looked at the price of FTT. I mean, it's still down
pumping.
a lot,
It's pumping.
but it's like it's like
You want to hear something
$3.5.
insane about FTT? The FTT price is still like 4 or 5 times the price of like my entry when I invested in FTT, which is ridiculous.
Yeah, and I heard somebody was looking to sell their account. I think just a few days ago. It's a pretty large account, like more than 5 million, and they were asking more than 60 cents, I believe.
Yeah, I think that's like around the market right now. It's like I've seen bids and offers between like the 60 and 70 cent mark. It's pretty good for. I mean, assuming that like people that are buying up big accounts, they have some sort of grasp on like what the value of these assets are. It's sort of good for the creditors. It means that like if people are willing to buy up big accounts and wait on it for 60 to 70 cents, it means like the value of FTX balances might be like over 70 to almost 80 cents on the dollar.
And also that assuming they don't sell all the coins and the market continues in even just like a vaguely positive trend, they'll be over 1.
Yeah, that would be an interesting situation. I remember, I forgot who I was talking to, but someone brought that up initially. Like, what happens if FTX claims go over a dollar? Or not claims, like the value of FTX balances versus like what they actually have is over a dollar. What happens to the excess money? And when they brought it up, I was like, oh, there's no way. Like they stole this money that we'd be lucky to get like cents on the dollar. But as I think about it, like a lot of the money was invested in certain things that may or may not play out to be very profitable. And it's funny, in like the SBF case, one of the defenses, main defenses, was that like a lot of these investments are going to play out to show profit, and we might recover more than we stole, which I don't know if it's a justification for like under the court of law for stealing money, but I found that interesting that they brought that up.
It reminds me of Tezos in some ways. I believe it was Daniel Kellman, famous crypto lawyer, who I asked him once about Tezos. I was like, "What's up with all these lawsuits against Tezos? What's going to happen there?" And he said, "Well, the lawsuits are claiming that they defrauded the investors, but if you're a lawyer, you know that you can't be defrauded if you made a profit. So the lawsuit is ridiculous." Because Tezos pumped, right? So yeah, there were a lot of shenanigans, but all the investors walked away with very reasonable profits. So I mean, I know this is very different. There were many other crimes going on there, but it would be very interesting if basically having balances on FTX turns out to be a better investment than like holding in stocks, right?
Yeah,
Very
it's very possible. It's sort of similar to the Mt. Gox situation, right? Because a lot of people have their Bitcoin or their positions on Mt. Gox that would have sold at like sub $100 Bitcoin. So in theory, because their money was locked or because their money was stolen, but a portion was recovered, uh, in the end, if Mt. Gox ever pays back the Bitcoin that they have, which I read in a few months, they're going to be releasing like the first tranche.
That's
Um,
18
but
months. That's the
yeah,
way to say
yeah.
it.
Who knows? Who knows? It's almost a meme at this point of like
Yeah.
the Mt. Gox coins are hitting the market.
Did
I've been waiting like 5 years of anticipation for this.
did
Uh,
you have an account there?
yeah, I did, and it's a pretty sick story. I had an account there. I didn't have a balance, or if I did, it was dust, and I didn't even bother claiming. Um, I had an account there, and at one point, I wanted to buy like 25,000 Bitcoin when it was like, I want to say like $4 or something. And this is like my first interaction with Bitcoin. I sent like a wire to the Japanese entity, their bank, in order to buy Bitcoin, and my bank did not allow the transaction to that bank, so then I couldn't make the purchase. So I was protected by the U.S. government very well
Thank
there.
you.
A lot of
I
protection.
I
Thank
didn't
you, Gary. Thank you.
I didn't even know how to do that. So I I moved money to PayPal, and I used PayPal to buy Linden dollars, the currency in Second Life,
Uh,
and I used that currency to buy a voucher on Mount Gox, which I could use to. Do you know what the fees are? The fees are way more than 50% on this. Uh, that's how hard it used to be. So everybody out there is thinking, man, if I only knew about Bitcoin in 2000 or whatever,
Yeah.
I would have
yeah.
been loaded. No, it was
No.
impossible to buy this stuff.
Yeah. Until Coinbase came out, basically, it was at least for Americans or like most people that didn't use Mount Gox. It was very difficult to buy
Mm,
Bitcoin. Like another big option back in the time was local Bitcoin, but then you would also have a lot of that was like pretty sketchy as well. I mean, like just
Yeah.
conceptually thinking about it now, like it basically is like a peer-to-peer market where people, a lot of them were like in-person cash transactions, which is like meet me in the street at like 3 p.m. I'll give you some cash and you'll give you some Bitcoin. Like the thing about it that now that does not seem safe.
no, I've yeah, I've done that quite a bit, like meeting people in like local bars and stuff. It's pretty. You meet some pretty sketch people.
Yeah. I think now though, like Binance have a pretty sizable share of that with the P2P market, right? I think
Yeah.
Binance P2P is pretty big. But
Yeah.
um, what do you think is next for Binance? Do you think they lose significant market share on this, or keep it?
I think they lose like a decent portion of market share, but still maintain their position as number one by like a pretty healthy margin. Um, it's actually questionable how much CZ impacts their day to day operations besides just being like the cult of personality leader, which I feel like is like a lot less important going forward than it has been in the past. Like all the major projects or exchanges always have like you have like Arthur for BitMEX, you have like someone Justin Sun for Poloniex and Tron, like Vitalik for Ethereum. Like the list goes on and on and on. But I feel like crypto is going to evolve to a point where just like the the head thought leaders or the head people in charge being someone in the know that's like active within the community is going to be less important. And what's going to be more important is like the execution side of building new products, like building products or maintaining an exchange that customers want to use. If you can look at it like I feel like this is sort of a similar situation to what happened to BitMEX back in the day, maybe like 5 years ago. Like at that point, BitMEX had an absolute monopoly on on the future perpetuals, whatever you want to call them, trading, especially for Bitcoin. Like at one point, I think they had like 80 to 90% of market share, which is still much higher than Binance's current market share. I believe Binance is probably around like 50 to 60% right now, depending on like what volumes you believe. Um, yeah, and obviously BitMEX has fallen off, and I don't think the reason was like Arthur got in trouble with the law and left. I think it was mainly because they didn't innovate their products in a way that made customers want to come back rather than look at new exchanges that offer better customer service, better products, a better trading experience in general.
Yeah.
It's interesting you talking about like the cult of personality, which is a nice segue actually to the blast situation, which has happened in the last week.
Let's
What's your take on that? How that's
I
all
was
gone
going to
down?
say, let's get some disclosures here first.
Yeah. Okay.
So, what level in the pyramid are you guys on
I'm
Blast?
not on the pyramid. I am out of the
I
pyramid.
wish I chose to sit on the pyramid, but
I'm also out. It I saw the list of investors. I'm like, there is not one crypto Twitter influencer who is not on this list of investors. Not
yeah,
one.
I feel like the biggest problem is it's all the crypto influencers that are within like the seed rounds. So
Yeah.
in general, those are the people that like are going to be are going to be dumping on you. So yeah,
Yeah.
it's a kind of odd situation. Like I guess let's talk about like the idea of what Blast is. Well, Blast
Yeah.
is essentially an optimistic Ethereum layer two, or I mean, in theory, I say because it's not that right now. It's literally just like a wallet with a bunch of money in it right now. Um, they don't have like any technology. But besides like the promise for future Blast tokens within the airdrop, but essentially, like in theory, what I understand the way the chain works is every asset on the chain, or at least like a majority of the assets on the chain, will be like real world or at least yield bearing assets. So instead of having like a native USD token, you're going to have a USD token that is like rebases in some way because it's deposited into say like the MakerDAO Spark protocol, or instead of Ethereum as like the base Ethereum, they're going to have like their Lido staked Ethereum. So like the Ethereum that's traded back and forth is going to gain yields off of staking. Um, I guess it's a
So,
reasonable idea. I mean, no one's really
so
ever done that. A few things I don't understand is the sort of need for a layer two where like you can just introduce a platform that sort of does all of this. Like what does the layer two really accomplish outside of adding another layer of risk, because now you have like an additional bridge to the layer two, which I don't know how they're going to handle bridging, but it's just like a layer of risk. I guess the selling point for investors is if we develop a layer two, like we can value this project higher than just like a standalone protocol on Ethereum layer one, or even like using a different layer two. Um,
I got a
Other than that,
question.
yeah,
Going back a little bit here. So I understand that it's going to be an Ethereum layer 2 optimistic rollup. About the yield thing. So I mean, when you get Ether on Arbitrum or Optimism today, it's bridged over. But what is actually happening is there's a multisig or a
hmm
smart contract on Ethereum where your Ether goes,
hmm
and then uh, Ether is minted on the other chain.
hmm
Is how it works. So
uh-huh.
are you saying that the point is that all the money in the multisig on Ethereum is yield farmed in some way
Yeah,
by the people who run the chain, like the DAO, as we say, uh, and you somehow benefit from that on the L2.
yeah, I believe
Okay.
that's how it works. So if you bridge assets over, like for example, if you bridge Ethereum over, they'll take your Ethereum, they'll deposit it into like the Lido staked Ethereum, issue you Ethereum on the layer two, but that Ethereum token is in theory yield generating because instead of just holding your Ethereum on a bridge in a multi-sig, they're putting it into Lido or whatever ETH validator they're using in order to gain yields.
Is there a is there a problem if this multi-sig is already massive? I think there was like 450 million or something now.
Yeah.
is, I mean, I know they're doing very vanilla stuff. So the ether goes to Lido and the DAI goes to Maker.
Hmm.
But like in the long term, if you have this massive, massive wallet that is yield farming, is there a problem if the wallet is run by a DAO with like very transparent operations, in that you're always showing your hand and it's massive, so people are gonna counter trade you somehow?
Uh, Counter trade, I'm not sure. I'd be more concerned about like possible exploits.
Mm.
Uh, just because, so it's like a 3 of 5 multi-sig, but then I saw like all the multi-sig participants were just funded by the same wallet, so it's questionable like who these I mean, like if you ask them, they're not going to tell you who holds the keys to the multi-sig. Like I'm not sure if like the one dude that runs it and runs Blur Pac-Man was forced to dox himself to the investors, or anyone really knows who he is.
Mm.
um yeah, like it just seems, it just seems like quite a bit of risk, because like not only do you have like this bridge risk, but then like every asset you deposit into a third party yield farm essentially um takes that protocol's risk as well. So if something happens with Maker or something happens with Lido, then like suddenly like all your assets on this L2 are going to be worth nothing. But then
Mm.
also, if nothing happens with them, but then something happens with the multi-sig account, then also all your assets are going to be worth nothing. And like I don't understand the, so like a ridiculous amount of money went in. I sort of understand the reasoning why that happened, because they basically set it up as a giant Ponzi, where if you refer people to deposit, you get some of their returns, and then if they refer people to deposit, they get some of their returns, but then you also get some of the underlying people. So it's a literal pyramid. Like they drew like a sideways pyramid on their deck, which I find hilarious.
It's the
Um, so,
I've
so
been
then
told
you,
that I've been told it's the most stable structure.
it's the most stable structure if you're on top, but if you're at the bottom, it's not great.
Well, I did you guys see? I've seen it flying around that they've had an audit. I don't know what they've had audited though, because supposedly nothing's built
Yeah,
yet, right?
I don't
Do you
know.
know?
I don't know what that. I saw that as well, but I don't know
Yeah,
what that they have to audit, because they don't have
yeah,
a layer two. That they literally just have. Are they auditing like the multi sig wallet? Like,
yeah.
yep, there are 5 signatures.
Yeah, and all the audit, like I just literally just searched on Twitter now, and it's just like, yeah, it's come back, and there's zero client compromised. Compromise. It's like, oh, on what? Like, what are we looking at? No one even knows. So,
Yeah, yeah, it's actually very smart what they did, because they like they found like the investors or people like in the community that are basically the people at the top of the pyramid are perfect at being at the top of the pyramid, where they have like huge followings, like a lot of like 100 IQ and under followings that will just like do as they say. And then like the pyramid structure works because those 100 IQ followers have maybe like 50 IQ followers that follow them that will do as they say. So it makes sense that the TVL went up quite a bit. It's funny, like the day, or like within a few days of the launch, I had like 14 people, or 12 or 14. It was over 10 people message me, like some people like I haven't talked to in months, with like their own affiliate link. They're thinking like, oh, I'm some whale and I'm going to deposit in this Ponzi under them, which I found hilarious.
Uh,
what
yeah, I'm curious to see. I was gonna say I'm curious to see what's gonna happen, but we know what's gonna happen. I mean, it's a pyramid scheme, so
Yeah,
it will very
like
quickly run out of new people.
yeah, the pyramid scheme is basically only for the token itself, which I find kind of interesting, because like how much can this token really be worth? I mean, like it's a native token on a new layer two. We've seen like native tokens on most layer twos don't really do much, um, and there's like so much TVL in it right now of people just farming the token. I assume a vast majority of those people are going to be looking for extra liquidity. They're not depositing money in order to long term hold this token. They're looking at it as a short term yield farming, where they get the yield from, let's say, Maker or Lido, but then they also get like the additional yield on top of it from like this native token. It's not that much different than what happened in most of DeFi summer, like a few years ago, where a majority of the yield was protocols just printing governance tokens and then generating, and then people LPing, generating governance tokens and then selling them. And then, like protocols would incentivize people to provide liquidity for basically exit liquidity for people farming these tokens by incentivizing pool twos. I don't see how that's going to be any different for this. You have so many people, so much TVL already. The chain doesn't do anything. Like there is no difference in terms of like real yield between you depositing on Lido versus you depositing to this multi-sig and the multi-sig depositing on Lido. The Lido yields aren't like exceptional. The Maker yields aren't exceptional as well. So yeah, it'll be interesting to see how it plays out if they're actually going to introduce, like, one thing I'm interested about is what kind of decentralized applications they're going to launch on this chain, and how are they going to function when like the entire chain, the premise or narrative is built around like yield bearing real world assets. Are they going to do anything interesting, or is it just going to be like the same like 5 or 6 dApps that you have on like every chain or every layer 2?
Yeah, but if you bridge in, at least you get some points. Hey, it's good. Always good to get those points.
Yeah. It's great that they call it points. Like I think that came from Friendtech, right? Or for Friendtech, which is fallen off quite a bit because the Ponzi has seemed to have run its course. They also called their future vested tokens points.
And it's if you think about it, the users basically migrated from Friendtech to Blast. Mm-hmm. If you look at the timing.
Yeah.
Well, I guess we will see where it heads. What do you think what's your outlook for the next, both of you? What are your outlooks for the next few months? Like, considering it's been a bit up only for a while, but what are you excited about? What's interesting you for this?
In crypto in general, or are we talking specifically about?
In crypto in general.
Yeah, I'm always like, I feel like I'm always perpetually slightly bullish. There aren't that many negative catalysts. The whole Binance situation has sort of played itself out. I feel like it's been looming for a while. All things considered, at least for like the average crypto user, the resolution to the whole Binance situation was about as good as it could be for like individuals. Like there was no loss of funds. There doesn't seem like there's going to be like a sweeping regulation coming. I know they're going to oversee Binance operations, but I don't think that means that like they're going to be really cracking down on accounts, and that they're going to be like, it's going to be more difficult. They're going to increase like the KYC AML situation there. And like overall, I'd say that's like a pretty bullish for the industry. The whole ETF thing sort of has become a meme, right? Like there's people are filing like fake ETFs right now just to pump the price of Ethereum and Bitcoin. We'll see if like the BlackRock spot ETFs will ever happen. Obviously, it's kind of funny. The one bull catalyst that people constantly talk about are these ETFs. It just means that like basically like boomers who don't understand crypto are like forced to buy crypto because they're going to have it like on their brokerage, and like the funds that they invest in, like the IRAs they invest in, stuff like that, are going to have exposure to this. And yeah, it makes sense. Like it means more people are buying crypto, but it isn't like a technological or use case. Like the way I see crypto innovation and like bull cycles happening is that you sort of have like new paradigms, like new 0 to 1 protocols, stuff like that, use cases for crypto, and that sort of catalyzes more and more people to join. But like the catalyst here is just like I can log on to my like IRA account and buy some get the Bitcoin. It's not overly exciting, but in theory it will pump the price. And then obviously that there's going to be like a few negative catalysts like there always have. Like we talk about Mount Gox, we talk about like the FTX estate selling. Other than that, yeah, I guess let's see how it all plays out. I feel like the Mount Gox thing is the most interesting because it is a lot of Bitcoin, and obviously they've been hinting at it for quite some time. But at least in my eyes, I feel like the end is imminent, or it'll be resolved like within like the next few years. So like you have a lot of people that have had funds like on Mount Gox for over 10 years at this point, suddenly having access to their funds. It'll be interesting if there's going to be like an exit of the crypto markets, or maybe like a rotation to other assets. Like if people are going to be buying Ethereum, Solana, AVAX, stuff like that, or just like converting it, or even just like keeping their Bitcoin and being like long-term Bitcoin believers.
Yeah, the I haven't thought so much about the Mt. Gox situation, because it's like you said, it's a very diverse group of people, and they've been forcibly holding for so long, and they've seen their assets appreciate a lot.
Yeah.
So either they will just continue doing what they're doing, which is not sell, or maybe they will finally buy that that 2010 Prius they always wanted. They were dreaming about when they first had their money frozen.
Yeah.
But
What
yeah,
do you-
I've been bullish all year. I feel good about things. The my only question is what to be bullish about, which I guess is on the list of topics for today.
Yeah, because I guess we've seen as well this. I know as well, Jamie, you've been having plenty of guests on the show that are involved in the Solana ecosystem, for
Yeah.
example, and that since you started talking about it, it's probably done a 3x at least. So start talking about it on the show. But like, do you think that narrative will continue, or do you think there's people are missing something totally different that? Yeah, I guess there's a bunch of stuff going on, but what do you think might pop?
Yeah, I think that continue. Like I talked about it a lot. Like I feel like Solana is more welcoming to new users. It has like huge technical advantages to Ethereum, even compared to Ethereum layer twos. The one thing I always talked about was the price of Ethereum doesn't necessarily, like I was 100% confident on like the bullishness of Solana based on like the development, the people involved, the whole way everyone responded to the FTX fallout. I mean, if you look at like a little over a year ago when FTX blew up, you have like a bunch of problems that were FTX projects that were FTX funded that they probably designed the tokenomics of all the projects, just stuff like Oxy, Map, Serum, and stuff like that. It's just like overhang bullshit on the Solana ecosystem, and like I feel like one of the main reasons that people were using Solana at the time was because FTX was involved with them. It was also like fairly seamless to move funds like from like Ethereum base layer to Solana through FTX, like all the wormhole assets, stuff like that. And when that blew up, obviously the price of Solana went down a bit. Obviously, the FTX estate has a lot of Solana, although I think they sold most of it already. But besides the lock Solana, their lock Solana positions are quite large, and there seemed to be like all this negative like baggage associated with Solana. And then like a few months passed, it was interesting that like a lot of the projects that were building on Solana didn't move elsewhere. Like they didn't move to like Cosmos or something like that. They can continue to build on Solana without like this catalyst, this third party that was funding it at all. And like the Solana community has been growing, just like talking to people like within the community. I know a bunch of people that went to Breakpoint They were like even back when FTX existed. I feel like the Solana community, the FTX community, had been like diverging uh, quite a bit. Where like if you go to like something like Breakpoint, people aren't talking about like Sam and Sam's coins. They're talking about like what other people are developing on Solana, and I feel like Solana is one of the best, if not the best, layer ones that basically facilitates like whatever you can imagine you want to do on a blockchain. Like Solana can essentially facilitate that, which is like a big advantage to have versus other chains. Yeah, so like going forward, I don't think anything, like I said in the past, has really been invalidated. Like I even said that like Ethereum is at a crossroads. It's in a difficult spot where it's essentially relying on layer twos to scale. Like Ethereum base layer isn't really competitive with basically anything in the space besides being decentralized, whatever that means. But then if you look at Solana, uh, Solana is decentralized. We talked about this before, but decentralization is also not like a zero or one thing. It's not like you're either decentralized or you're not. That there's varying levels to this, and Solana is getting increasingly decentralized with like more people running validators. There's a lot more competitive liquid staking solutions. So like in the past, there's only been like two or three major ones, but now like a lot of the protocols are developing their own liquid staking. And then like if you look at Ethereum, the whole blast thing, the one downside of it is that it just means that like there's like 200 or 300 million more dollars being deposited into Lido staked ETH, and they already have like a massive portion of the on-chain staked ETH. So like we talk about like centralization versus decentralization. I don't see how something like Lido, even though in theory it's a bunch of different users and they're running different validators, it's just essentially the same central organization that controls, like they're going to control like 30 to 40% of the staked Ethereum, which is probably not a good thing in terms of decentralization. So yeah, like in conclusion, pretty bullish on Solana. I feel like a lot of people are doing very interesting and cool things, and the chain definitely facilitates whatever they want to do.
And yeah, and on Solana, it sounds like, I mean, if you're doing stuff on Ethereum day to day, which I know you probably are, then I mean, you know how high the fees are, right?
Mhm.
You can't. I mean, if you're farming anything with less than like $100,000, you're probably losing on fees.
Yeah.
That's just a complete guess, but it's pretty bad, and this is in a very quiet market. So I do have this worry that Ethereum is going to face the Bitcoin situation again, which is as soon as it catches on, it becomes unusable, and people get dismayed, and then this loop just goes on. And then you wait for a while, and the Bitcoin maxis are like, no, check it out, the fees are low again. It's like,
Yeah.
well, yeah, because everyone stopped using it 1 year ago.
Mm-hmm.
And I really do wonder on Ethereum how can you attract retail if the ticket size is $100,000? Like, how's
Yeah.
that work?
I guess the one bullish thing for Ethereum is the new Ethereum improvement. They call it improvement protocols, 4844, like proto dank sharding. Basically will reduce fees. This is all theoretical, obviously. We haven't really seen it play out, but will reduce fees, but then also make Ethereum less of like a shared state machine where like if like for example if there's a day of volatility and suddenly like all the perps are going crazy and like they're using a bunch of gas, it won't drive up fees for the entire chain, which I think is one of the big problems for Ethereum that like Solana has sort of figured out. Like so like the way Solana works is First of all, on Solana, basically you don't pay fees, which is a plus for the user. But then also, if there's like network spam, or if there's like something going on with like say an NFT mint that's going on in like a segregated portion of the chain, um, the chain can introduce like a fee market, which increases the fees for people that want to participate in that specific subsector of the chain, like within those transactions. But the remainder of the chain, the fees stay consistent. Whereas Ethereum in its current state, basically, if for example there's like a bunch of like Aave positions that are like curve positions that are like getting liquidated, and people like trading back and forth or stuff like that. Like if you're using like a small DApp on like the other side of the chain, it's still going to be impacted by the fees paid elsewhere on the chain.
What are some competitors to Solana that we could see gain a lot of traction before the next bull run?
I'm always like sort of bullish on AVAX, just because I don't know. It's a love hate relationship, because like I look at like every time I read something on Twitter about AVAX, that there's always some drama going down, or that there's always some issue, and like the people on it are um I feel like a lot of the people developing on AVAX right now are involved in like the AVAX ecosystem, um, aren't utilizing the merits of the chain properly. But it still has like a pretty high um, market cap, pretty high valuations everywhere. Like there's a lot of TVL. Um, yeah, so I feel like I'm perpetually bullish on AVAX as a chain.
And
Other than
there's
that,
one thing I want to add on AVAX before we move on,
uh-huh.
is that um, I have to deal with a lot of EVMs in my non-podcasting day job,
Mm-hmm.
and there's quite a few of them. There's at least 7 big ones, EVMs,
Mm-hmm.
and most of them have just perpetual problems.
Mm-hmm.
The chain is not running smoothly, often even in the bear market.
Mm-hmm.
The biggest problem ones are Polygon, very unstable. Binance Smart Chain, notoriously unstable.
Mm-hmm.
This is in a very slow market, right? There's
Mm-hmm.
not many users on these, and they're just not consistently getting your transactions through. I don't know why. I don't mind Ethereum, but they don't. I don't validate Ethereum. But AVAX is completely different. It is very, very stable.
Mm-hmm.
Um, and I guess it's because of Emin's team.
Yeah.
They're academics. They study validation and finalization times, right?
Yeah. Yeah.
So
Yeah, I feel like there's also a little bit of disconnect, and I think this is true for all chains, between like the people actually developing the technology on the chain, and then the people that are developing dApps or use cases for the chain. They aren't the same people. So like obviously the technology on a lot of chains can be very good, but if you have like complete idiots developing dApps, and then you have like a shitty ecosystem, it doesn't really matter. And I'm not
you're
saying
clearly
that
talking
that's
about the Avalanche. That's funny.
I want to preface this by saying I'm not saying this like specifically about Avalanche, because I do think that there are like good dApps on Avalanche, but like in general, I just like the way Avalanche is designed, like the whole all the EVM C chain, the fact that they have like a subnet system that's like sort of similar to what Ethereum wants to do with sharding. It's not the same, but it allows like projects to build like it builds its infrastructure that allows, like for example, if you have a project where you onboard users that aren't really using like all the dApps on the chain, but are mainly transacting with each other, like they actually have like a place to go where like the fees are minimized in a way. So the chain design is pretty well done, and it like we talk about like Solana infrastructure. I feel like AVAX is maybe a level below, but it's still great for facilitating new use cases of blockchain.
And you started mentioning a second one when I interrupted you.
Second, let me think about this.
Because this is like leading into a question I wanted to ask
Uh-huh.
for the show, which are two questions. One is in response to something you said on Twitter, which is you basically said you're all trying to guess what is the second best, but most of you are guessing number 5 or 4.
Yeah, no, I was basically saying like the second best was like between like the second and 10th best. The technology, I feel like for the end user wasn't that much different. I don't know. I like Cosmos. I like Dot. They're sort of similar, but also sort of different in their own ways.
Mm-hmm.
I feel like anything that moves out of like the sort of boring traditional like EVM copycat or like a layer 2 copy, either like optimistic rollup, whatever you want to call
Yeah.
that, that adds something unique or does something different, is always interesting. I think those two are the ones that both have interesting technology, but then also already have like a high market cap, like a decent number of users that may gain some long term adoption. Like DYDX, their new version is out on Cosmos. Instead of being their own Ethereum rollup, stuff like that.
I thought there was Starkware.
What?
I thought it was previously on Starknet.
It was developed on. Well, it was. I guess the rumor is basically like the Starkware team just wrote all the code, but the DYDX like layer 2, even it's essentially the same technology, but they were their own standalone roll up.
Okay. And yeah, what do you think? Like there's this thing we have because we do cycles of these things, and things usually don't survive 2 cycles.
Mm-hmm.
Very few, even the characters don't survive, except of course His Excellency Justin Sun. So do you think people are going to do perp trading on DYDX or GMX in the next bull market, or did they have their chance, like cycles over?
I think those two will definitely last as long as people are like still, especially for like GMX, people are still providing liquidity, and their version 2 looks pretty good. It's like more capital efficient, stuff like that. Obviously, yeah, it's hard to say. I think there's always going to be value for perps because there's always value for being able to essentially what a perp contract lets you do is sort of print money out of thin air, where like you can be trading assets without like there even needing to be a supply of these assets, where like a lot of the basic limitations for just trading spot markets is that there's like limited supply. You have to, if you want to long something, you essentially have to hold it. Other than that, like just having like a one-stop shop, where I guess theoretically the custody aspect of it, or like the risk and custody aspect of it is minimal, because like for example, if you have like a perp dex or a perp exchange that lists like hundreds and hundreds of assets, and not all of those assets have to be like on Ethereum ERC20 or like even EVM compatible chains. Like the whole custody aspect of hanging on to those assets and moving funds back and forth is going to be a nightmare. But if you just offer perp markets, and then you have certain assets that you can hold as collateral or use as collateral, then like there can be hundreds of millions of dollars of volumes traded among assets where the exchange literally has a custody of none of it. So I feel like that aspect is really interesting for perpetuals. I'm fairly confident that like both GMX and DYDX and similarly designed perpetual dexes will be around next cycle. I'm not sure if they will be the major players. I feel like DYDX will be up there no matter what. GMX less likely. It's because I feel like GMX is more reliant on individuals providing liquidity rather than like actual market makers. So like the way DIX works is it's a decentralized exchange, but it like links to a central limit order book for everyone, including market makers, and that's appealing to market makers because they don't have the latency or the technical issues that they would if they're just like market making on a DEX only, and then obviously moving to Cosmos. Cosmos is like a faster, more reliable chain than say like using an EVM layer 2. For GMX specifically though, like it's the market makers or the in theory market makers are just the people providing liquidity. Like you deposit your assets into like a GLP or into their GM pools. You're essentially the market maker, but it's the more passive market making. So GMX will rely on those people. So the question is how many people are going to be trading on GMX? How many people are going to be very profitable trading on GMX, and will that outweigh the fee structure? If people are less likely to gamble, and then you have more of this toxic flow going in, then like the LPs are going to start pulling out, deciding that they don't want to be counter trading a majority of the toxic flow. Whereas if it's like next bull cycle, people just see GMX as an outlet to gamble, and they're just placing directional bets whichever way that they feel. That becomes very bullish for GMX because then more people are going to provide liquidity and the whole thing sort of grows.
Yeah, what's the opposite word of toxic flow? Benevolent flow? No.
Yeah. Benevolent flow. Yeah. Hopefully we see some benevolent flow that the next bull cycle.
That's what you want. What's his name? Like Andrew Kang or something? Just like YOLO long something because he's bored. Yeah. Best flow.
Yeah. And like I feel like GMX, or at least similar perpetual Oracle-based perpetual exchanges like GMX are doing, because I feel like all these teams are very smart and they understand the limitations to the design of their platform. So they're doing stuff in order to sustain the longevity of their exchange. For example, the main issue happens on GMX where if there's a market move and like a huge portion of the open interest is skewed one way, then like it could be devastating. Like for example, if like 80% of the GLP pools long Ethereum moons, like the GLP will go up because Ethereum is like one of the major components of GLP, but then like the GLP people are counter trading like an 80% long position on all traders, which is not good. So then they're introducing stuff like, for example, dynamic pricing on fees. Whereas if it's like skewed in a certain way, they're going to heavily disincentivize people to increase the skew and heavily incentivize people to decrease the skew. So then it becomes like economically unfeasible. Like for example, if you want to long Ethereum, but like if a lot of people are long Ethereum, like suddenly like the fees you are paying are insane to a point where like I've seen positions get like liquidated on no market move just because like they're paying too many fees and that they're not realizing the fee structure. So there's obviously stuff that can be introduced for people to for people to sort of figure out the issues with their own protocol and protect it from being irrelevant, I guess.
On Solana, I mean, we had one on the show, but what are your favorite? If we're just gonna guess that retail perp action will move to Solana because it's cheaper, easier, and it's quite friendly. Like it's a friendly crowd, right? And people like new things. So if the benevolent flow, which is the new retail flow, if they move to Solana to do perpetuals, where do you think they're gonna go?
I'd say the most likely is Drift. Other than that, I haven't used much outside of Drift. I think there's one called like Zeta. There's one
Zeta Marquez.
I forget the names of the other ones, but yeah, I'd say like Drift is the most likely, unless I'm missing something. I don't trade that many perpetuals on Solana, just because the liquidity is a bit limited compared to something like DYDX.
Mm.
But yeah, I'd say if it really takes off on Solana, I bet that Drift would be the biggest. And Jupiter, I think, also has perpetuals. I use Jupiter a bit.
Yeah, and for that makes sense. Do you think options will finally take off, or is it just too complicated? And
Uh,
and also, do you think you're basically if you do options on chain, aren't you really just trading on Deribit with the worst price?
yeah, it depends on how like the protocol is designed. Um, well, I think one thing I've learned is people are also willing to take a worse price as if they don't have to use a centralized exchange. Like I think GMX is also a good example of that. Like if people are taking positions on GMX, or if they're long there, they can be long elsewhere and pay far less fees, but they would much rather use. I guess like the entry exit slippage for size also has something to do with it. But I feel like that there's a market for people who just don't want to use centralized exchanges and are willing to pay higher fees in order to have like a fully decentralized experience. What that like spread or margin is, like how much more fees are you willing to pay to use a DEX is questionable, unknown at this point. But there definitely is, or there definitely will be demand if like if a platform is built for options with like a decent amount of liquidity. There will be people that would much rather use that on chain than use something like Deribit.
All right. Cool. I guess I think we've got through all the topics that we were meaning to look at today, right? Is there anything else you guys want to run through, or should we
That
call it a?
that's everything I had. Damn, what you did.
I think that's good.